I mean, the climate finance flowing to developing countries is increasing. I mean, we see from the reports that climate policy initiative releases every year, that flows are increasing. Obviously, what everybody was concerned about in Lima were the flows from north to south. There are a lot of flows south to south. So a lot of developing countries investing their own resources and investing across developing countries. But the key question in Lima is north to south. And I think according to the latest estimates is something in the order of 30 billion that we have seen in the past year. So that scale and that level of ambition has to increase, obviously, if we are to meet the challenge that we are faced with in terms of climate change. In terms of the climate investment funds, we have currently $8 billion, slightly more than $8 billion. And our leverage ratio is around 1 to 8, which means that another 8 times 8 billion is north-south flows that we are promoting over a number of years across 62 countries in very transformative and important projects, from mitigation to adaptation, from renewable energy to water management or sustainable land management practices.
What kind of projects do you look to invest in? What kind of returns do you need? What kind of value do you sort of seek?
We invest in projects, as I was saying, across sectors, and we invest in projects that right now still need concessional finance, a level of subsidy, with a view to over time, and once the markets pick up or the cost of the technologies, for example, come down, with a view that support is no longer needed over time. We will still need to do it for certain technologies for longer time, for other technologies for shorter periods of time, but until those investments become fully commercial and without a need for concessional finance. So we are addressing different types of risks that both public sector and private sector investors face when they want to invest in these type of technologies.
We're at a carbon markets conference. It's not entirely clear how carbon markets are going to be represented in any global climate deal, or whether there's going to be some reference to them. And a lot of carbon markets around the world are still at a very early stage. What kind of potential do you see for them to both be able to work in a sense of cutting emissions, but also to be able to drive new sources of finance? Is that something that the CIF would be working more in or interested to work with?
We are very interested because we know that the public finance is not going to be the solution. Public finance has to be a catalyst for private sector investments. And we know that there are expectations over the next couple of decades, a lot of investments going to be made, trillions of dollars of investments going to be made in infrastructure. And so we need to find ways of, with the little public finance that we have, unlocking private sector investments in the things that we think are necessary, or in the places and the technologies and types of investment that we think are the necessary ones, in terms of sustainability and climate and climate change. So I think the climate agreement, will recognize that. It has to recognize that, because everybody recognizes that the private sector has a key role to play. And it's a matter, and it's not going to be one way. It will have to be, through a variety of approaches and instruments. Certainly, carbon markets could play one role, along with other approaches and instruments. And I think what we need is a portfolio of approaches, because, as we know, the challenge is very big. We have to act at scale very quickly, and so we need all of the mechanisms that can work, and that can work within the time frame that we need. I don't have the answer in terms of what the agreement will contain, I don't know, there's more or less skepticism whether or not carbon markets will feature in the agreement. But my own plea, to everyone is to look carefully at all of the instruments that can potentially work or are working, like the climate investment funds, and really bring them to scale.
Just a final point, I mean, it looks like there is an increasingly large number of development banks. We've had the BRICS Development Bank launching recently. There's talk of a China Development Bank. You've got the Green Climate Fund. Where does the CIF sit in this kind of mosaic of various climate and development banks? What's your kind of USP, your niche that you're focusing on and selling to, not selling, but pushing out to prospective investors?
I mean, we are, as you're right, we are in this mosaic, but we were first movers. So, back when we were established, and still we are the largest active international climate finance mechanism, and we have been, demonstrating that, these investments, which we are sponsoring, are viable investments in developing countries and markets where people were very skeptical. Back in 2008 and 2009, there was a lot of skepticism whether or not, we could really see these investments taking place in the countries which we initially considered as, markets to invest and support. And now here we are, 6 years after, and with concrete projects, with concrete results that are really at a significant scale, are transformative, and showing the way. So this is a big benefit to the other institutions that are coming in, Green Climate Fund, the BRICS Bank, the other Asian Infrastructure Bank. All of them stand to benefit from our experiences, and what we have learned so far in terms of structures, financing structures, regulatory issues, the whole range of issues that are necessary to look at when one is investing. So, and we have a proven model that developing countries, we just see more and more demand for it. We've tried a different business model with the climate investment funds that is working, that developing countries recognize. Other developing countries want to be part of it. We've just gone through a process of expanding 2 of our programs. A big demand. We don't have enough resources to meet all of this demand, and so we just hope that we can continue and scale what we've been doing, because the demand is out there, and we have proven that it is possible. I mean, you sort of raised the question, what would be our role in all of this mosaic? I think the question needs to be flipped the other way around, is what is the value added that others need to bring in addition to what we are doing? So I would flip the question, and I think it's a very important question, is what should be the business model of these other institutions, acknowledging that we need a variety of institutions if we are really to scale these investments. But so what should be their business model to be complementary to what we are doing, and we are doing well?
All right, well, to ask you your own question, what should the BRICS Bank or the Chinese Asian Development Bank, what should they do? What should they be learning from you in order to ensure their investments are, work over a longer term, low carbon basis?
So they need to be, first of all, one has to assume that they will put in place and endorse the same sort of environmental and social safeguard standards through which they will do all of their business. Also, other mechanisms and tools that development banks are using right now, like climate screening tools, to make sure that all of the investments that they will support take climate into account and climate impacts. And then moreover, they have to, if they are going to support either public sector or private sector operations, it really doesn't matter. They need to see, again, I come back to my point, they need to see what are others doing, what are others doing well, and how can either we scale that, or what can we do in other sectors where nothing has yet happened, and what is it that is necessary to make those investments happen.